Yes. Yes. Hello. 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 Hope everyone is okay. Let's get started. Now, I want us to make a recap on our last trades that I took during the week. First and foremost, you are all welcome to this YouTube channel. If you haven't subscribed, kindly I request you to subscribe, comment, share this video to your friends such that we can learn something. So I want to make a recap on the trades that I took last week because last week I had a trade on USD CHF. I had a trade on Euro JPY. Then I had a trade on Euro GBP. So kindly do a favor, subscribe to the channel, share the channel to your friends. Let's grow the channel such that we can get benefits from it. So if you make me happy by subscribing to the channel, then I'll also do a favor. And every week I do a recap on the trades that I took, or I might continue. I might start doing weekly break it down, and we try to get some trades on the coming week. So kindly do a favor, subscribe to the channel such that we can all benefit from this content. Okay, now on this pair, this one is Euro GBP. Had a setup on Euro GBP, but okay, let me try to use another broker. Euro GBP. Should we use Rwanda? Okay, let's use Rwanda. Let's use Rwanda. So the time frame that I used, I started from the daily, meaning most of the times I need to focus on this thing, these trading ranges, meaning we had this, okay, we had this, we had a break, we had a sweep, then we had another break to the upside, meaning when you try to mark out this, you will see that, okay, this one is what? A sweep of liquidity. Then a break of the previous high, meaning we have here a break of structure to the upside. So whenever I have a break of structure to the upside, it means that this one is a protected low. This one will be a protected low. This one will be a protected low. And then the market will keep on giving something like this. Something like this. It can do something like this. It does whatever it wants. Then after a while, it will retrace to these zones. Then we continue with the buys. Meaning we need to see the three things. One, we need to see, we need to know the structure. We need to know the structure of the market. Then after the structure, we shall try to look for liquidity. We shall try to look for liquidity. Then after liquidity, we shall try to get our POI. POI, in simple terms, we always use QMs. QM, or we shall be using candle wick. Candle wick. Or we shall use what? This one, sorry. This one is candle wick. Or we shall be using what? Order blocks. We shall be using order blocks. We shall be using what? Support and resistance. We shall be using support and resistance levels. So these are the things that we always follow when it comes to this type of trading. So we need to keep these things in mind such that we can do what? Such that we can do what? Such that we can get our setups. So remember, I saw this trade when it's just here, some here, but I don't have a replay mode, so you will allow me to use the display that they will do what they will give me. So I don't have a replay mode, but we shall try to catch up. So here, when you try to see the market started trading, okay, it started from here, then we dropped. They swept this, then they dropped, they bought, drop up to these zones here. And then they continued doing what? Buying. They continued buying up to that. So when you try to remove this sketch that I've drawn here, why do you see? What do you see? We shall already see that, okay, the market is bullish. So if the market is bullish, we shall be looking for buys, not sells. So we shall start marking up our structures, meaning you can see that, okay, we swept this high and we swept this high too. After sweeping these highs, what do you see? Where is this originating from? We can see that this high is originating from here, this order block down here. It's originating from there. So if it's originating from there, what are we going to do next? You can see that we had this one as well. What we had this as the liquidity that they swept, then the market dropped to these zones and they started buying, meaning we need to get trades within this leg from here. We need to get a trade from here. Remember, this is a daily time frame up to here, so we want to get a trade from here, to these highs. So how are we going to get that trade from that area? Then we shall drop to what? We shall drop to H4 time frame and see what H4 is doing or how H4 is trading. So here on H4, you can see that still the current market structure is what is bullish. So when we try to bring this, you can see that the market started doing what? Sorry. We can see that the market started buying from here. They broke that high. They came to this area, doing what? They came to this area, then they dropped a buy, a drop, a buy, a drop, a buy. Then they broke this previous low from here. Okay, I can mark here. Then we had a retracement to these zones. Again, they did what? They dropped. They bought, then boom, they came to these zones. So still on H4 time frame, if the current market is still bullish, what are we going to do? We can also mark up we can start now looking for setups from H4. So you can see they swept up, they broke this high and they broke this high too. Then after breaking this high, we can see that we had what? We had a break of structure today downside. Even if you go on the range chart, you can see that we had a sweep of liquidity, then a break of structure today downside. So after we getting that break of structure to the downside, then what we are going to do is either drop one time from lower, which is H1, and start looking for setup for entries, or we can just use this H4 time frame for entries. So after taking out this high, after taking out this low, we can see that when the market was buying, they created this liquidity. So it's a must that they will come and take out this liquidity before they continue. Before they continue what? If they continue buying, so we shall mark that as liquidity. Then what do we have below that liquidity? Below that liquidity, we had this order block. We had this order block here. But are we just going to buy from that order block? Are we just going to buy from that order block? No, we can drop to H1 and see if there are any confidence that will allow us to buy from that order block. Here on H4, you can see that we had this sweep of liquidity. Then we had this one as a break of structure to the upside. So after we getting that as a break of structure to the upside, we can see that on H1, this was the liquidity that was created. This was the liquidity that was created. So if we have that as our liquidity, then what's our point of interest? Our point of interest could come to this what we are seeing here, that we had this order block down here. We had this order block down here. That's where they bought from. And this one will be a protected low, meaning we don't expect the market to go past this low. So what we do, we shall mark this one as our high, then this one is a stronger low, then our targets will be at this high. So you will be safe when you place your trade from here and your stop loss below this protected low. We can do something like this. Okay, let's do 6 pips. 6 pips SL. Then your take a profit will be where? Your take a profit will be here. Your take a profit will be there. Then during the coming week, I would like to see this market buying up to this zone. Buy from here, from where it closed up to this area. Then we shall get what we call a 1 to 9 our risk to reward 1 to 9. Then I also had another trade on Euro. Was it Euro JPY? Yes, Euro JPY. Sorry, I had a trade on Euro JPY. So how did I get this trade? This trade I started from H4 time frame. Okay, let me clear everything. I was on the daily here. Here on the daily, you can all see that the market is what? The market is bullish. If the market is bullish, we had a break of structure from this high. We had a break of structure from this high. Then this one was the main break. And we had a sweep of liquidity from there. It means this one will be what? A protected low. Then this one will be the high that we need to take our trades from. Then let me clear everything. Then I try marking up on the line chart, on the candlestick chart. So this one was the main break of structure, meaning the overall market trend is bullish. So here we've identified our structure that we are bullish. Then, as the market was buying, we had also this high that was taken out. Then, after a while, we saw that we broke structure to the downside from that high, from this low. Meaning, why did the market drop from? Why did they break from here? Other traders will say that okay, the market is what? The market has changed the character. Then the trend is what is bearish. But when you try to see why is the market dropping, it's because they swept out liquidity from this area and they broke structure to the upside from this high. Then this one will be what? This one will be a protected low. This will be a protected low. And then when you try to refine, okay, even here I can get an hour entry. Then Do we have any point of interest here that it can push the market higher? Yes. We had this support level. We had this support level that we expected the market to buy from, and currently the market is buying from there. Then when you try to go to H4, what do you see on H4 time frame? On H4 time frame, still you can see the same thing that we had here: sweep of liquidity, a break of structure. Then you can see that still we had a sweep of liquidity and a break of structure in the opposite direction, meaning when we get such a pattern, something like a sweep, then a break, which liquidity will always be created. Then we had this one as a sweep and a break of structure in the opposite direction. It means we have this one as a protected low and this one as a weak high. So the market will always come to take out this internal range liquidity. After taking out this internal range liquidity, then the market will do what? Will buy in the original direction, taking out this high. So that's why the market did what? That's why the market broke this low, confusing other traders that the market is bearish. Yet in actual sense, the market is what? Is bullish. So on H4, you can see that this one was the first retracement that the market made before breaking these highs. So we shall mark this one as our what? Inducement, meaning this one is our liquidity zone. So if this one is our liquidity, if that's the liquidity, then we shall do what? We shall get our buy trade from this daily support or resistance level. Then here we had no level for refinement, meaning you can go to H1 and see, or there is any refinement level for us. Let's try to see, did we have any refinement? Even on H1 we had no refinement, but still you can see that here the market offered this order block as a point of interest, but yeah, offered this, but as you can see, they didn't come to that level. Why did they do? Why did the market didn't come to this level? It's because that inside this we had this one as a sweep of liquidity. We had this one as a sweep of liquidity. Then we had this one as a break of structure to the upside. So this will be a protected low. So we don't expect the market to buy to take out this low, then it continues buying. Instead, when it takes out and closes below it, this will be a break of structure to the downside. That's why the market didn't buy to this level, and instead the market bought from this. So if I could enter this trade, I would have entered from here, and I entered it, and I'm still holding the trade. Then my SL was below this, but I used something like a 20 pips. I used 20 pips SL. It was there. Then my targets are up here. Let's go to H4. My targets are here. My targets are here. 260 pips. Meaning that will be something like 13 RR risk to reward. Using how I frame my trades. Simple. As long as you follow these steps that I'm doing, everything is simple, and you can make it. This was the second trade. Then I have a third trade that is still running. I have this trade on USD CHF. Yeah, it's USD CHF. Should I use forex.com? Okay, no. Let's check H1. Yeah, you can use forex.com. So in this trade, when you try to go to the daily, let me remove everything. When you try to go to the daily, what do you see? On the daily, you can see that we had this break to the upside. After we getting that break to the upside, then you can see that the market offered this order block. The market offered this order block, and currently the market came and reacted from this level. So after that, you can see that even here we had this. So let's go to H4 and see what the market is offering on H4 time frame. So yeah, on H4 time frame, you can see that the market reacted from this daily level, and there was liquidity created below this. So they took out this liquidity, then they reacted and started buying. Now, uh, now here you can realize that even on this time frame, we had here a sweep of liquidity. And do we have any break of structure to the upside? We have this as a break of structure to the upside. So if the market is offering something like that, then what we shall do is drop into H1 time frame and start framing our trade or start looking for entries. So here on H1, you can see that okay, after taking out this low, the market broke structure to the upside. Then still did the same thing in the opposite direction. Sweep of liquidity, and they broke structure to the upside. This one can act as our liquidity. And then after that acting as our liquidity, we can see that we had this candle wick as our point of interest. So this one is a protected low. That one is a protected low. But for me, I would prefer putting my stop loss below here. So if they take me out from here, then I will automatically enter from this buy zone. But for me, my first entry is at this zone. So if you enter from here, it means you press your stop loss below here. And then you'd final take a profit. Either you can go 1 to 3 or you can put your take a profit up there. That is it. Withdraw yourself 8 pips. Or you can decide to enter from there, then you put your stop loss below here. But it's 20 pips SL. No, 20 pips SL. Or you can either have your second entry from here and your stop loss below that, then your take a profit will be here. Your take a profit will be here. 60 pips. Risk reward is 1 to 6 RR. So these are the trades that I took last week, and this one I'm still in. Okay, I'm still in all those 3 trades that I got last week. So guys, if you are new to this channel, please do a favor and subscribe to the channel. You can share this channel to your friends, yeah, such that they can also benefit from this knowledge. But now, I sign out. Bye bye.